Reid, thank you so much for joining us. You invested in Airbnb 10 years ago, so obviously it's been a big week for you. I have to start on the price here. Shares now trading at $146 a piece, more than double the opening price, 5 times as much as what Airbnb raised at earlier this year. What's been your reaction to this?
Well, obviously, I've been super pleased for the company and for the team and the recognition for what the company is trying to do in the world and how important it is as part of the future. And I think that's part of what you see reflected here. I think that the question about like, how do we transform travel? How do we transform a sense of community, a sense of belonging? I think those things are super important. And I think that the market is responding to it. So overall, I would say I've been just delighted.
I told Brian that the price had doubled live on air yesterday, and he seemed genuinely stunned. He was at a loss for words. It was a special moment. But if even he is surprised, are you at all concerned that the valuation is too lofty, that tech valuations in general are getting out of hand?
Well, I'm a little bit worried about the overall market generally, because I think we still have a lot of the pain of the pandemic. How it's going to affect small businesses and Main Street and all the rest of it throughout our whole economy. And I'm kind of worried for society and the economy as a whole to get back to the necessary rebuilding that we need to do. And that may be reflected in, I don't really tend to think about valuations in a days and a months period. I tend to think in a years period, because it's like, what are you building for the future? So I guess the short answer is kind of strange for investors. I'm not sure, but I'm most focused on like what do the next few years bring us.
So let's talk about that. Tech has seemed so decoupled from what's going on in the rest of the world, what's going on with regular Americans in America. Are you at all concerned we're in a bubble that could burst, or do you think the good times are going to keep on rolling?
Well, I think fortunately, ultimately for the country and for the tech industry, what we're seeing from the pandemic is a huge acceleration of the digitization of work, of life, of all these things that kind of matter to us. And that, of course, means more rapid adoption of the technology products, more innovation, more fast growth, and that will be good for the tech industry. Now, what I think what's really important is that we bring the tech industry to help everything else. Like we bring more tech platforms to help small and medium businesses, for example, like Airbnb does in terms of tiniest. It's like individuals paying their mortgage and rent through being able to build a tree house in their backyard, or any number of other different ways that you can develop upon Airbnb. And I think that's what's going to be really important, because the technology is going to shape us, is going to be able to get us out of the recession, to be able to build the industries of the future, including SMBs. But we need to get there. And I think that's what's really important.
Now, you wrote a beautiful post about your investment in Airbnb. I know some of your colleagues didn't think it was a good idea. Who wants to rent out someone else's couch? And it has been a long 10 years, 12 years since they started the company. What has stood out to you? What makes Airbnb and Brian and the team different, especially given so many ups and downs and the lowest point back in March?
Well, it wasn't a surprise to you probably, and a number of other people, that when I launched my podcast, Master the Scale, I made Brian my very first guest, because I'd learned so much from him and Nate and Joe about how to do this. And what I'd learned from that very first meeting through it is that they didn't just treat it as design of a website or design of an interaction or graphics. They treat it as the design of an experience, the design of visiting a place, the design of connecting with the local community and belonging. And they looked at all of these different elements, including, doing all of this very gritty work about going and visiting some of their hosts and finding out what was going on and all of this. And that's part of what I think is part of their magic, and why Airbnb is built not because it's like, it's AI algorithms are a whole lot better, but because its human experience is better from this design perspective. And that's what I think I've personally taken away from it.
Now, obviously, this is a week that you're celebrating, the team is celebrating, but there is a lot of talk about that $4 billion that may have been left on the table. Some of your VC peers, like Bill Gurley, have been out there saying the IPO process is broken. How are you thinking about that? Should the process be reevaluated? I mean, you took LinkedIn public, you're helping to take a number of portfolio companies public, and I wonder, are you aghast at the money that could be in their pockets right now?
Well, I think that the whole thing is a little simplistic and fictional. I mean, we had the exact same commentary when we took LinkedIn public, because LinkedIn also went substantially up. And part of what everyone seems to misunderstand is this is a journey of decades. It's a journey where you're going forward. And so part of what you do, you say, well, what's a price that I can get a lot of long-term investors, people who will be with me for a decade, 2 decades in building this company. And you try to get that price, getting them on board as high as possible. That will always probably be a little under, maybe sometimes surprisingly under what the market price is, especially in the first month afterwards. And that's fine. That's a month in a multi-decade journey. And so I actually don't, and it's unclear that if they had gone out and said we're pricing this at 146, that it would have had nearly the same demand or anything else, because these are other people coming in saying, hey, we think you're a buy at this price. Some of it you might have known, some of it you may have learned, but that's okay, because the real question is what you're doing over a decade.
Now, that said, it goes back to this idea that tech is somewhat divorced from what's going on in the rest of the world. And I know you said you're worried more broadly, and I'm curious, what is your advice to entrepreneurs right now? I mean, are you telling them raise right now, strike while the iron is hot, or, we can wait it out? It seems like, this positive environment in Silicon Valley is going to extend.
Well, I think as an entrepreneur, you're always focused on speed. You're always focused on motion. So generally speaking, entrepreneurs who are thinking, hey, I can go public now, or entrepreneurs saying, hey, I should raise now, that's generally a good idea when the markets are open and believe in the future and are pricing for the future. That's a good thing for entrepreneurs to work on financing. So broadly speaking, that's the advice that I'm giving. Now, that being said, again, the whole thing is you're building for a decade and more. You're building for the long term. So you don't ever just do something financing because you can. You don't just, your success isn't financing. Your success is in how you transform the world, how you offer products and services that are magical to people, how you help elevate your society, create new jobs and employment. And that's the real metrics that you're kind of looking at. But of course, availability of capital is a very important part of entrepreneurship.
Now, you told us earlier this year that you were investing in founders that you'd never met, companies that don't have offices, that it's, the pacing of deals has been incredibly fast. What's happening now? How competitive is it? How often are you making investments, and how long does that keep up?
Well, all of us at Greylock have been kind of running to keep pace with what the general acceleration in the industry. You would have thought that, oh, well, since traditionally it was like you go by your office, we visit your offices, yes, we still do calling a bunch of customers and all the rest. But actually, in fact, we're finding the pace is, if anything, picking up, moving faster. That a bunch of folks are either doubling down on the venture game or entering the venture game and doing this. And I think this is great for entrepreneurship. Makes our jobs a little harder. Because we pick very few companies that we think are like the Airbnbs, the transformers of industries, the transformers of the world, the enablement of empowering hosts and travelers, and you have to pick the few. And so when it's all happening much faster, it makes my job harder. But I think it's better for American society, better for the world. So I welcome that.
Now, one of the few you picked is Aurora, the self-driving car company that was founded by top talent from Waymo, Tesla, Uber. They just bought Uber's self-driving car unit, ATG. Is 2021 going to be the year that self-driving cars have their moment?
I think 2021 may be a little bit early, but maybe not too early. I think it's a small n number of years, and I think that the what Aurora is doing. I sometimes refer to Chris Urmson as the Henry Ford of autonomous vehicles. He blushes. It's because he's got a good humility, and I think actually, in fact, we are at the doorstep of the beginning of a super interesting autonomous vehicle transformation of our society, which will have all kinds of positive and ultimately very positive implications. We'll obviously have to work through kind of as the years go on, the translocation of the industries and what this means for employment and what this means for other things. But like all productivity increases, overall, it will benefit everyone in society a lot.